In this video, I'll analyze the Q1 FY26 result and Concall of Khazanchi Jewelers. So let's start with the company overview. So Khazanchi Jewelers is a Chennai-based jewelry company. They are present in both B2C and B2B segments. But in terms of the revenue, B2B business contributes around 95% to their revenue. They are mainly specialized in making chains, ring, Mangal Sutra, all kind of gold jewelry. So that is their specialization. In terms of the B2C segment, they have a 1200 square feet showroom in Chennai. So that is the company overview. So let's talk about the Q1 FY26 result and Concall. So in this quarter, in terms of their revenue, in this quarter they grew their revenue by 6%. But if we look at their past few quarters, then obviously the growth rate was higher. Like they were growing at a pace of 90 to 100%. But in this quarter, obviously the growth rate has been little low. But if we compare it to RBZ, in this quarter RBZ degrew by 10%, whereas Khazanchi showed a little growth, obviously. So in terms of that, Khazanchi is still ahead of RBZ. RBZ is the main peer of Khazanchi because if we look at the segment, only RBZ and Khazanchi are present in both B2C and B2B segment. Okay, but obviously we can compare Khazanchi with Sky Gold also because as I said that 95% of the revenue comes from the B2B segment in Khazanchi Jewelers. So that is one point. But anyway, this quarter was little low, I would say, comparing to previous periods. Okay, so that is one point. But if we look at their guidance, the management has been guiding us for a growth of 30 to 35% for last few quarters, and the management still guiding us for that 30 to 35% growth going forward. Okay, so that is one point. In terms of the B2B segment, they have around over 500 clients in their B2B segment, and in this quarter they onboarded Malabar Jewelers. So that is one thing happened very well with them, that one big player joined as their client. So that is the point with the B2B segment. In terms of the B2C segment, they will open a 10,000 square feet showroom in Chennai by Q2 FY26. So that is one point. And as I said that they have one showroom in Chennai with a space of 1200 square feet. And in terms of that, if we compare it to the new showroom is 10,000 square feet, which is pretty big. Okay, so that is the point. And what the management is expecting from that premium showroom, the management is expecting a revenue increase of 150 crore annually. So that is one point, because if we look at the FY25 revenue from the B2C segment was around 90 crore, whereas they are expecting a 150 crores of revenue from the new showroom. So going forward in FY27, in FY28, we can expect a higher revenue from the B2C segment. And what is the impact of that? Obviously the gross margin in B2C segments are higher, obviously. If we look at their gross margin, overall company gross margin, that is around 5 to 5.5%, whereas they are expecting a gross margin of 13 to 15% from the new 10,000 square feet showroom. So that is why their margin is going to improve in the future. And one another thing, the company is saying that if everything goes right in this 10,000 square feet showroom, then they will open 4 to 5 showroom by FY28. That is what they can and they are planning to do, but all will depend on the performance of the new 10,000 square feet showroom. So that is the point the management is saying. But obviously if they can expand their B2C segment, obviously the margin will be higher. That is one point obviously, and I would say that is the main point in the B2C segment. And in terms of the, if we look at the overall gross margin in this quarter, they improved their gross margin by 200 bps to around 5.5%. So that is a very good thing. And one another thing the management is saying that they have introduced the lightweight jewelry 18 karat, and another one that is the diamond jewelry also. So that is one thing the management is doing, that they are introducing lightweight jewelry like 18 karat, 14 karat jewelry, and obviously the gross margin in the 18 karat, 14 karat is higher than the 22 karat or 24 karat. So obviously it will help the company to get a better margin. That is one point. And because Khazanchi is based from the South India, as we know that in the southern part of India, the studded jewelry or the lightweight jewelry is less popular than the northern India. But the management is saying that that the lightweight jewelry are started coming in the South India also, and South India also looking for those slowly and gradually looking for those lightweight jewelry. And that is why obviously, as I said, that the margins are higher in the lighter weight jewelry. So obviously as the lighter weight jewelry gain the share, volume share, obviously the margin will be better in the future. So that is one point with the gross margin. In the last quarter also, their gross margin was in the range of 5 to 5.5%. So that is the point with the gross margin. In terms of the EBITDA margin, if we look at their past few quarters, they have always been a company with a gross margin of EBITDA margin of 3.5 to 4.5%. And in this quarter also, I would say they did a very good job, that they improved their EBITDA margin by 170 bps to 5.2% in this quarter. Okay, so that is a good point. But obviously we can, as I said, that if they introduce, when they introduce their B2C segment, when they will increase their B2C segment, then after that as they more produce those 18 karat, 14 karat jewelry, the margins will improve in the future. So we can expect a better margin going forward, obviously. That is the point with the EBITDA margin. In this quarter, in terms of the PAT, they grew their PAT by 65%. So obviously they got the operating leverage because the revenue grew by 6%, but the PAT margin grew by 65%, which is a very good thing. And if we look at their PAT margin also, they have always been a company with a PAT margin of 2.5 to 3%, 2.5 to 3.5%, and in this quarter also they have done a similar kind of a PAT margin. So that is a good thing. So as a whole company, if we look at the whole company, what we can expect going forward, we can expect a better B2C sales, better studded ratio, obviously, and both of them will result into the better margins, in terms of the gross margin, in terms of the EBITDA margin, in terms of the PAT margin. Okay, so that is the point with the company. But one thing we have to keep our eyes on is the revenue growth, because if we look at their revenue growth till the last quarter, they were growing at a very high pace of 90-100%, and they were giving a very tough competition to the Sky Gold in terms of the growth rate. But in this quarter, their growth rate has slowed down to around growth rate has slowed down to around 6%. It is better than RVZ, but obviously if we compare it to Sky Gold, that is little bit low, because Sky Gold grew at a rate of 56%, if I'm not wrong. So in terms of that is the point I would like to say. The guidance has always been around 30 to 35% revenue growth conservatively. So that is what we have to look at in the future. The levers are there to improvement, like in terms of the margin, in terms of the revenue. So that is one thing we have to look at in the future. So that's it for the video. Thanks for watching.